The big question for today, are mortgage rates going to plummet? Well, let's have a look. Jennifer Tim with the Welcome Home Global Group. And in our Monday market update, we're going to have a look at that question and what some of the experts are saying. And we're going to take a deep dive into a couple of our local communities. Well, as we get started, just hope that everyone had an absolutely amazing Thanksgiving. And just watch your pocketbooks with Cyber Monday. I know I'm being inundated with text messages and emails about the amazing deals that we have to have. Well, maybe not. Okay, so let's get going. So this is our big question. And I know that this is something that buyers are really hoping that the answer to this is yes. Well, let's have a look at what's being said nationally. And of course, it truly feels like this is a holiday gift to home buyers. This was from an article November 21st, so just before Thanksgiving in Realtor.com. Are lower mortgage rates a holiday gift for everyone or a temporary reprieve? So I just took a couple of the highlights from that article and we're just going to read through them and give you a perspective on what's going on. So soaring mortgage interest rates, which have caused deep financial pain for many home buyers and led to a freeze in the housing market, dropped by 0.5 percentage point over the last 2 weeks. Always good news. They fell from 7% earlier this month to 6.53% for a 30-year fixed rate loans in the week ending November 23rd, according to Freddie Mac. The number of homes for sale is still critically low. Builders worried that they wouldn't find buyers for their residences, and they're slowing the pace of construction. And sellers, most of whom are also buyers, are reluctant to give up their low mortgage rates to buy a home with a new loan with a higher rate. And as high as mortgages rates are today, they're still substantially lower than they have been. In 1981, rates peaked when they briefly topped 18.5% for a 30-year fixed rate loan. Well, there's some historical perspective for you. Then it doesn't really look that the 6.5% we're looking at right now is that bad. Easy to say, however, unless you are a buyer today. So what we have to have in mind, it's better than an 8% rate, which is the historic average. Okay, so bottom line from this, yes, we saw a reduction in the interest rates. It's because the Feds came out and said inflation data is looking a little better. However, the economy cannot afford a major housing boom. So are we going to see interest rates plummet down to the 3-4%? Highly unlikely, unless there's some kind of absolutely horrific event that takes place, which of course none of us are hoping for. So that would be like the pandemic. That was the reason why they were dropped that low. The Feds are still trying to get inflation rates back down to a manageable level, which means that those interest rates are going to remain where they are. So there's speculation that they may go over 7% again next year. So in 2023, some folks believe that between the 6 and 7% is where we're going to stay. And again, a good reminder that the historic average is that 8%, and I've seen other reports that it's 7%. I guess it depends on how these experts choose their numbers. So we're kind of sitting where we're going to be for the next period of time. So no major gift for buyers, no major plummeting of those mortgage rates. So what does this mean? This means that for buyers and sellers, you need to get creative. And I actually had a conversation with one of my colleagues who has been in the industry a couple more decades than I have. And we had a really good conversation about what he's seen over time. However, what we do know and what we are seeing currently is a couple of different options that are helping both sellers get their homes sold and buyers afford to get in when they're sitting at those interest rates where, if they just look at the way things have happened in the past, there's no way that they could afford to actually qualify. A 2-1 buy down. This means that a seller is going to offer to pay for some reductions in the interest rate for the buyer's loan. So the first year they would buy it down by 2%. The second year they would buy it down by 1%. And then the third year is when that mortgage would return back to the original rate. That is a huge advantage right now. I mean, the difference between a 6.5% and a 4.5% could just be that difference that allows the buyers to qualify for the home that you're trying to sell. It's an option. Definitely something to think about, because again, sellers, we are no longer in those crazy, hot, extreme sellers market where basically you were guaranteed virtually, of course, there's never a guarantee, but you know, the chances were extremely high that you were going to end up being able to sell for much higher than list price. You could demand that the buyers removed all their contingencies. So those days are gone. Those are really in the past and not likely to return. A second one that is starting to get traction again is an assumable mortgage. So what does this mean? Now think about that buyer who has been quoted the 6.5%, 7%, whatever the going rate is. They're looking at that mortgage payment every month and it's just not affordable. Now, what if they could assume the mortgage that you have? So instead of paying that 6.5%, 7%, they're paying what you're paying. And that could be 3%. I know we refinanced at 2.3%. So it could be higher, it could be lower. Now, the challenge with this one is not all mortgages are assumable. And it is really, really important if you're a seller to find out whether your mortgage is something that could be assumed by a buyer. Buyers, to find these is going to be a little challenging. This is something that has been done in the past, and it's starting to gain attraction again in these tough market situations that we're in. So sometimes it's a bit challenging. So make sure that the realtors that you're working with know to ask that question of the sellers if there's a home that really appeals to you and you want to try and get into it. Make sure from your lender that you truly understand what the pros and cons are of doing this. But again, that's an option number 2. And definitely an existing older mortgage rate is a lot more attractive than a new one. Seller concessions. This is where the seller is willing to pay for certain costs associated with closing on a deal. It could be that they're going to pay for the closing costs for a buyer, whereas a buyer normally pays those expenses. And definitely in the market that we've been in where your sellers didn't have to think about anything. So it all goes down to negotiating and finding a win-win for everyone. Very important in today's market. If you're motivated to sell, you are going to have to get creative. Buyers, make sure that you're hiring the right real estate professional who knows how to seek out these opportunities for you, because you don't want to miss out on the opportunity to actually get into a home at this stage. Because remember, you know, it tends to be cyclical with these interest rates. Do we ever believe that we're going to get down to the 2-3% again? Highly unlikely. Do we anticipate that once inflation comes down and the economy is kind of stabilized, that we will see a return to maybe some more favorable rates? Definitely, definitely. Now, we don't know when, but that means that if you can ride the tide for a while, take advantage of some of these options, you could then, what they say, marry the house and date the rate, which means go for that home ownership, start building your equity. And then a couple of years down the road, when those rates are more favorable, you're going to have the option to refinance. So that just gives you an idea of what we're seeing in the market right now, what's being discussed, what's being offered that are helping buyers get into homes, because the buyers have not gone away. So jumping into some Southern California news, and I know I missed this in the beginning, Jennifer Tim, the Welcome Home Global Group, and we are based in Southern California. I'm an absolute data nerd. I follow the market trends every single day. I'm looking at the numbers. I'm following all the experts. Of course, a lot of our experts had some time off last week to spend with their families. So instead, what we're going to do is we're going to have a look at some of the local the interest rates being offered by some of our local lenders. And then we're going to dive in a little more detail to four of the regions of the communities in our area and just really get a feel for what is going on there. So interest rates, as we mentioned, and this was a report that I got yesterday. No, actually, I apologize. It was over the weekend. So that's what United American are offering right now for their rates. And again, it all depends on what you look like as a borrower. You cannot make any assumptions when it comes to this. You have to work with a credible loan originator, loan officer, to make sure that you understand what your position is. This was from last week, right before the holiday, and these were the rates being offered by Wells Fargo. So again, there is a huge advantage to shopping around and finding the right option for you based on what your needs are. So again, it's all about being creative and strategic. Make sure that you're not leaving money on the table or giving unnecessarily where you don't have to, if you've just got the right option here and you could find a more affordable option. All right, so this is where we're going to just jump in to Dana Point, Laguna Beach, San Clemente, and San Juan Capistrano, and just have a look and see where we are and what the kind of trends are. Normally we just focus on a couple of these numbers, so we're going to go in a little deeper. These were numbers pulled this morning. Median list price for homes in Dana Point, 3.3 million. Now, remember that we have so little inventory coming onto the market at the moment that basically one high-end listing is going to totally skew the numbers. So while we do have properties available for less than 3.3 million, this is basically what our list price is, because we've got some very high-end luxury properties that are now sitting on the market a lot longer than just a couple of months ago. So median list price, 3.3. Median days on market is 56. Now, we know generally in Orange County, we are in a balanced market. So it's 90 to 100 days on market before something goes into escrow. Whereas in Dana Point, our median days on market is 56. So that means it's still a seller's market, which is why you see that slight seller's advantage on the graph on the left-hand side. Price decreased. So that's another thing that has been asked recently, is how many price reductions are being seen? And there are some. So it is so important, because if you as a seller are then having to go and do price reductions, basically that's when your median days on market is going to go inch up higher and higher. When we have a buyer who comes in and we run the numbers for them and we tell them median days on market is 56, and they see a property that's been sitting on the market for 90 days, and it's already had a price reduction or multiple by this stage, they're kind of thinking, what is wrong with that property? When in actual fact, it may not be anything wrong with it. It just wasn't priced competitively to start with. So don't do that to yourself, sellers. Make sure that you're actually listing your properties at market value. And what we say is pricing ahead of the market, because we know where we are. We are in the end of year total decline, lowest buyer demand, lowest number of listings on the market, but that doesn't mean there aren't buyers, and there's still buyers looking for the right property. Our inventory, 39 properties. Now, these are single family. I didn't include the multifamily type units or condos, anything like that. So there are only 39 properties on the market in Dana Point. That is not a lot of inventory for our buyers to look at. Interesting on here is to see the median rent, 6.6. So $6,600 a month for rent. And that's not something that a lot of people can afford. So bottom line, Dana Point, we're still in a seller's market. I have not yet seen Dana Point move out of the sellers. It's kind of fluctuated where it's slight or stronger, but we're definitely in a seller's market. Laguna Beach. Laguna Beach, for most of us who know, highly desirable, beautiful ocean views, higher priced properties. And we can see that with a median list price of 4.45, our median days on market is 84 because of the higher price point. Those properties are taking a lot longer to sell. Price decrease 43%. So we are starting to see, and a lot of those are going to be the luxury properties that came on right as the market was shifting. And a lot of those sellers still thought that they could get those amazing high sell prices. And of course, they're coming to the realization that their buyer pool is, because for those folks who are at that higher net worth limit, it's not really whether they can afford to, they don't need to borrow money to buy. It's whether it fits in with their financial portfolio. Our inventory, 91 properties on the market, a little more than Dana Point, but of course not nearly as much as what is needed. Median rent in Laguna Beach is $10,950 a month. So a slight seller's market there. San Clemente, our median price point here, 1.95. Again, these properties are still coming in over $1 million. There are more options that are available that are under $1 million. And our median days on market, 49, so even stronger than Dana Point as far as how long it's going to take if your property is priced correctly for the market, 49 days on market. Price decrease, 46%. Again, some of those holdout sellers are realizing that a price reduction is appropriate, and we are seeing some really substantial price reductions coming in. Inventory, 100 properties on the market. Again, not nearly as many as we have seen in past years, but again, that dip is part of the seasonality of where we are. Median rent is $5,500 a month. So seller's market in San Clemente. And then finally, San Juan Capistrano, medium list price is 2.295. We've got median days on market of 42. Again, San Juan continues to be a really strong seller's market. While again, they do have options that are a lot less expensive, they do have some areas where there are substantial homes on the market and slightly newer homes, because some parts of San Juan Capistrano have had the opportunity to have some new developments. Our inventory, 37 homes in San Juan Capistrano. It's crazy. Median rent is $6,350. So we're sitting with a strong seller's market in San Juan Capistrano as well. So bottom line right now, our big question is, are mortgage rates going to plummet? And the answer is no. So what is that really doing to everything? We have buyers who just cannot afford to be in the homes that they were originally looking at the beginning of the year. They've looked at what that monthly payment is going to be, all about your disposable income. And a lot of buyers have pulled back, not all of them. And I want to emphasize that there are still serious buyers out there. But sellers, they need to know whether you are serious about selling your home. So if there is a definite reason why you do need to sell your home, then of course, think about those creative options that you can offer to attract those buyers to your property. You are going to have to be willing to inspections. You're going to have to allow the buyers to do the inspections. You're going to have to let them, if there's a loan, they've got to get that appraisal in. So don't ask them to waive that appraisal contingency, because if you do, they're going to go to your neighbors down the road and put an offer in on that house, because those sellers have realized that the days of eliminating all those buyer contingencies are gone. They just don't exist at this stage. So get creative, and it is still going to be a challenging market, and the end is not in sight anytime soon. So success for our sellers: price ahead of the market, condition location equals the price. We talk about this every week. Your days stacking up are going to raise red flags for buyers. So don't add in that buffer. It's really going to cause you at the end of the day to end up selling more than likely for a lot less than if you had priced correctly ahead of time. Staging is important. Buyers are looking online. They want to look at that home and they want to say, oh my gosh, that is the perfect sanctuary for my family. That's the showcase. That's what I want. They don't want to look at something which, you know, looks like somebody pulled out a cell phone and took some photos of the chaos at this time of the year. We are in the holiday market. Demand is down. Inventory, we're in the December is the month when we see the least number of listings coming on. November is the second one, and we're almost at the end of November. So we're just not going to see a lot of properties coming on the market. Hire a real estate consultant, like someone from my team or anyone else in the industry who really knows how to sell in today's market. For buyers, it's strategy. All those things that we've listed here, you've got to hire the right person to help you look for those creative options that are out there. Make sure that you're partnered with the right financial people and the mortgage lenders. And again, you have the final choice in that. Don't ever let a realtor tell you that you have to use XYZ realtor. That is absolutely not realtor, loan officer or company. That is your choice. But what your realtors are going to do for you is they're going to send you to loan officers that they know can get the job done. Then it's up to you to decide if that's the right fit for you. But it's all about hiring the right people to guide you through this. Just like having a financial advisor, you want to have a real estate professional on your side. And buyers, just a point on that one, you know, we still have a lot of buyers who think, oh, I'm going to work with the listing agent because, you know, I'm going to eliminate, I don't need a buyer's agent because I'm going to get a better deal. Let me tell you, that does not always work in your favor. Remember that the original fiduciary responsibility was that realtor with those sellers, and then you're coming in as a buyer. And there are rules that govern this, but I just want you to know that you need somebody fighting on your side to make sure that you get the right deal. So choose the right realtor who's going to go to bat for you and find the most creative way so that you can afford to continue your home ownership journey, or even more important, to start your home ownership journey. So with that, it's the end of our market update. Sorry that I couldn't tell you that the mortgage rates are going to plummet. They're just not. But if you have any further questions, please don't hesitate. Pop them in the chat. Reach out. You can call us, text us, I'm on WhatsApp, whatever you need. And we are here to support you in your real estate journey. Have a wonderful week ahead. And buyers, don't spend all your money on Cyber Monday. Make sure that you're looking at your credit and help protect your credit so you can take advantage of wealth building through home ownership. Bye, everyone.